All right, so welcome back, everybody, to Building the Empire, a commercial real estate focused podcast hosted by the Commercial Real Estate Group at Georgia State University. My name is Payton Broaddus, and I am the president of the Commercial Real Estate Group, and I'll be your host today. And I'm here alongside my co host, Greg Hamilton.
Hey everyone, this is Greg Hamilton, Vice President of Craig. I'm so excited to join Peyton through this new season of Building the Empire.
Yeah, so we're super excited to kick off season 2 of the podcast with Mr. Greg Friedman of Peachtree Group. Greg, thank you for joining us today. We really appreciate it.
Yeah, thank you, Peyton. And you can call me Greg. You don't have to call me Mr. Greg Friedman. So
Okay.
it, I feel a little bit younger when you call me Greg. So we can start with that.
Gotcha. Okay. All right, Greg. Well, thank you again. So Greg, I mean, you've got quite the career here. More than 23 years of hospitality experience with an emphasis on deal structure and financing. You've successfully led Peachtree in more than $8 billion in hotel acquisitions, investments, and development since co-founding the company in 2009. Before then, you were senior vice president at Specialty Finance Group, where you originated more than $2 billion of hotel debt. And then before that, in your 6 years at GMAC, you originated, closed, and funded more than 300 hospitality financing transactions with an aggregate capital structure exceeding $10 billion. So you've done all this with a biology degree. So what was your original plan? Did you want to take biology seriously? How did you kind of get into commercial real estate and how'd you end up where you are now?
It's a great question. I get asked that question all the time. So when I originally went to college, so I went to University of Texas at Austin. When I graduated high school and was going to Texas, originally I was going to be a doctor. So the original plan was to go to medical school after college, and fortunately, I had the ability to pivot and get into business. And obviously, the first job I was able to get out of college was actually financing hotels for GMAC commercial mortgage, because at the time they had a group that specialized in doing hospitality lending. I was able to join that group. But the way I sort of ended up getting there was, when I was in college, my family, this is going back to when I was growing up, but my grandfather had owned some hotel properties. My grandfather owned a business that did a lot of lending to hotels. So personally, sort of grew up around the hospitality industry and grew up around just commercial real estate because my family, my mom worked in the family business. My family, beyond just owning hotels, owned commercial real estate assets as well as had that lending platform, as I mentioned. So personally, sort of grew up around it. When I was graduating college and really going into my junior year of college, I made the decision I didn't want to go to medical school and had that opportunity to pivot as I started looking for jobs. And this is going back to, graduate college in, 99. So this is back in the, 1998, 99 timeframe. And most of my friends that were graduating college at this point that wasn't going down the track of medical school or law school, a lot of them were going down the track of working for technology companies, really internet companies, because there was a lot of capital, a lot of opportunity was flowing into these internet companies at that point in time, as well as a lot of people were going into companies, especially leaving University of Texas. Enron back then was a big organization that was hiring a lot of people graduating from Texas and so forth. But I sort of, again, there wasn't a lot of people, chasing to go into, financing hotels. And fortunately, it had that opportunity. And that's how I ended up, getting that first job that allowed me to professionally get exposure to the hospitality industry. So I feel like it's, in my blood at some level, just given the fact personally grew up around it. And then professionally, obviously, was able to, make that pivot, coming out of college with my first job on the professional front.
And so you went to school in Texas. You're from Alabama, correct?
Yeah, I'm originally from Alabama, so I'm a huge anyone that knows me. I'm a huge because I grew up right outside Tuscaloosa. So although I didn't go to University of Alabama, I'm a huge Alabama football fan, and really, still go to 2-3 games a year for Alabama, and still try to get back to games for Texas as well, because I'm still a Texas football fan as well. But yeah, big fans of Alabama football. But I did grow up in a small town right outside Tuscaloosa.
Gotcha. And then how did you end up in Atlanta?
So I ended up, after college, going back to my first job at GMAC, the group I went to, the division of GMAC I went to go work for was based here in Atlanta. And that was the, first job, I was getting out of college. So I was, in order to take that job, I had to move here to Atlanta. And that's the reason I ended up here in Atlanta and I've stayed here since. So I've lived in Atlanta now for almost 24 years, which is crazy to think as I'm thinking about it right now. So it's been a long time.
Yeah, you've seen it, I mean, grow quite a bit when you got here. Midtown wasn't anything like it was, like it is today.
It's totally changed. Yeah, Midtown. If I would have known where Midtown Atlanta was headed, I should have bought up because there was a lot of, back then there was a lot of, vacant land parcels, a lot of, some developed, land that you could have bought probably on the cheap, some of the buildings that were there. But yeah, Midtown Atlanta's taken a life of its own and it's, turned out to be an incredible area. And even, going back to when I was in college, because I lived in Austin at the time, back in, 99 when I was graduating college, I always joke I should have bought up all of downtown Austin because that was another market that is just totally, that downtown area near the Capitol, near the university is just totally, changed in a positive way. There's been so much development there. I wish I could go back in time because downtown Austin as well as Midtown Atlanta, both those areas have really boomed over the last 23, 24 years.
So, you've had this career in, hotel financing. You were doing well at specialty finance and GMAC. So I'm just kind of curious, like, when did you start thinking you wanted to branch off, and, create Peachtree? I know you had a couple partners you started it with, but what was the thought process there? When did you decide, like, okay, I'm ready to take this leap? And then also starting in 2009, that I'm sure that presented its own set of challenges.
Sure. So I was always very entrepreneurial, going back to like high school, college, even in middle school. I had all these different, always had some type of side business, or some type of, so I was always very entrepreneurial. So best way to say it. And so, going back to, college, for instance, I had a, company that was, I had like a paging business. I had a business that was, it was an internet company that I owned and made a little bit of money off of. But so I always had that entrepreneurial, spirit to me. And then when I joined GMAC a couple years into financing hotel projects and really getting to really understand the economics behind what was happening in the business, I became, much more attractive to that business model. And as I became more and more attracted to that business model and understanding, the potential returns, investing into into these hotel assets and understanding the risk profiles and so forth, I really became interested in trying at some point in the future being able to go out and sponsor and develop, my own hotel assets or even acquire hotel assets for my own account. Unfortunately, I didn't have the money necessarily to do it myself, but I had enough money saved where I could go invest with some other groups, which I ended up investing with some other groups while I was still working professionally and had a little bit of success there. But then at around 2007, actually May of 2007, I went out and acquired the first two hotels with myself and my partner, who originally started Peachtree with. So both of us co-founded Peachtree, and we went out and bought two hotels together, and then we quickly signed up several new hotels to develop. We bought several land parcels to develop new Marriott and Hilton branded hotels, as well as we continue to acquire hotels not only in 2007 but also in 2008. And that's sort of how we ended up getting to where we are today. That was the initial the initial seed to Peachtree, and Peachtree's obviously pivoted and it's evolved over time, but that's that is how we got here.
Gotcha. Yeah. So I kind of want to talk about that a little more. So you started Peachtree, and not the best economic environment. Fast forward, had this big kind of bull run of growth in the real estate industry. You guys were doing great. Now we're kind of not in the best times again, but it seems like you guys are still doing really strong. I was reading in a LinkedIn post you made yesterday. You said that the time we're in now is a quote golden age for private credit. So can you talk like a little bit more about that and how you've been able to kind of position Peachtree Group as a leader in the private credit space. I know the private credit business is not new for you guys. A lot of people are trying to get into it now. So, what did you see all those years ago, and kind of how has that benefited you guys now?
Yeah. So, we've been able to, pivot through the years, right? Like we've been able to go out, and when we started Peachtree, initially we were just an investment company that was going out and acquiring and developing hotels. 2009, the GFC occurred. So during the great financial crisis, we saw this huge opportunity to buy distressed debt, and we pivoted our model from just acquiring and developing hotels to actually going out and acquiring debt at discounts with the idea of buying that debt at a discount to restructure and clip a great coupon. So that was the initial impetus to us becoming, a lender into the hotel space as well as to, other commercial real estate assets. So that goes back to 2009, 2010 time period. And then, we made another pivot as an organization in 2012 as we came to as the GFC, as we went from being in this great financial crisis to a more of a normalized credit environment. Back in 2012, 2013, we were able to pivot again, and we formed Stonehill, which is our lending platform today that really is going out and doing, executing our private credit strategy or private debt strategy, where we're lending to groups. We continue to acquire debt as well. So we buy debt as well as we, lend directly to, ownership groups that need capital to acquire, develop, recapitalize hotels as well as other commercial real estate assets. But we were able to form that company again back in 2012. And through the years, we became a known entity as a, source of debt liquidity. So liquidity for groups that needed debt, mostly first mortgage debt, to again capitalize their projects. And that's really how we started that entity. And that company has done, really well through the years. There's been moments of time like going back to the pandemic. So back in March of 2020, we were able to, pivot and shift and take advantage of all the distressed debt that was across the lodging space or the hotel space. We went out and bought over 180, loans secured by hotel properties. Mostly these were first mortgage loans secured by hotel properties, as well as other commercial real estate assets that financial institutions, mostly regulated banks, were looking to, sell this paper in order to delever their exposure to, lodging and other commercial real estate assets that were impacted during COVID. So we've been able to, pivot our strategy depending on, market conditions. And since I would say since the, first quarter of 2022, we've shifted from buying debt because the debt buying opportunities have not been as interesting over the last, call it over the last 12, 15 months. I think that potentially could change here in the near term. But over the last 12 to 15 months, we haven't been able to find a lot of debt that's interesting to buy, but we have seen a huge need that for groups that need capital to, capitalize their projects on the acquisition side, on the development side, or even capital to help refinance loans that are maturing, given the fact that the debt markets have really, have been frozen, for most of the last 12 months, just given, regional banks, community banks, a lot of the national banks have shut down on lending. So a lot of the traditional lenders that would finance commercial real estate as well as hotel assets have really pulled back, going back to 2022. That really accelerated after the events that took place with SVB, with Silicon Valley Bank. And that continues, and we expect that to continue to be an issue, just given a lot of the regional banks, as well as, a lot of, really, outside of the national banks, all the regional banks, the community banks are under a lot of pressure right now to drive liquidity. And that means, a lot of them are having to pull back on lending. And so that's creating a huge void in the market that we're able to take advantage of and be able to go lend to groups at more at a, at higher, at a higher yielding or higher yielding loans for us at lower leverage points. So it's a pretty attractive market today for us.
Awesome. And so, Greg, just a question for you. You've navigated through so many different turbulent market conditions, and of course, investors can get kind of wary in those market conditions. So, what would you say has been some of your most successful approaches towards raising capital and fundraising for the company and building that successful investor trust?
Yeah. So, I mean, I think we've had a lot of success historically just given our track record, and our track record only expands more positively during these moments of dislocation. So, we've been able to, drive really good returns. We've made over 650 investments as a firm. We've exited out of half those investments, and we've always, ultimately driven, really good outcomes to those investments for the most part. But during the moments where we have these dislocations, our returns accelerate by a good, 25 to 30% or more, based on what we produce, during a more normalized environment. So when we do get into these moments of like economic disruption, I think most investors, really appreciate the fact that we have a platform that can pivot from investing on the debt side, where we acquire debt or lend capital like we're doing today. And they also realize we can pivot to go out and acquire and develop hotels when it makes sense for that. So we're not very one dimensional. We're very diversified in how we approach the hospitality space as well as, just commercial real estate assets. And so I think most investors really appreciate the fact that that gives us a lot of optionality in how we invest, and it allows us to really take advantage of dislocations, take advantage of inefficiencies in the marketplace to drive those outsized returns.
Awesome. Thank you.
So I want to pivot a little bit towards kind of your personal strategy that you take, Greg. So I read that your favorite quote is the most important thing in communication is hearing what isn't said. So could you talk a little bit about your leadership style, and maybe how it's evolved over time?
Sure. So it's definitely evolved over time. And I think it's one of those that, as you get older, as our team has changed through the years as well. Because when we started the company, it was just myself and my partner, and then we've added obviously additional team members. And today we have, close to 240 corporate team members at the home office. We've got, out in the field at the different hotels that we operate, we've got thousands of employees, close to 3,000 employees. So it's changed. I'm a big believer in having transparency, having really clear communication, setting expectations, so everyone knows what the plan is, and making sure the expectations are clear to everybody, but also making sure you set expectations that are achievable, and having everyone bought into whatever the strategy is or the process and so forth. So, those are, I would say, some of the key takeaways I've taken as I've just grown as a leader, and some of the fundamentals that I'm a big believer in. I think it's one of those that as you go through these moments of like dislocations and economic disruptions, like if it's a pandemic, the current credit crunch, or even going through the GFC, by really focusing on those factors, it does allow for you to have a really strong team that's working together cohesively to make sure you're focused on getting the best outcome for the team and not focus on one individual per se. So it's a lot of those factors that that I've been focused on, but it is truly. I think it's one of those that like I like interacting with all of our team, because a lot of times you learn just by body language. Going back to the quote, you're able to sort of pick up on if there's certain issues or concerns, because a lot of times people don't, they're afraid to sort of speak, what their thoughts are. And I'm a big believer that I like to get everyone's, opinion and feedback and thoughts. And if someone has a different opinion or thought than what's in the room, I like to hear it, because sometimes you do miss something, or sometimes you don't have all the facts as it relates to a potential, issue or a potential investment. And it's always good to hear, the other side of, the argument. And I'm a big believer you gotta, let everyone, debate, you know, debate the best next steps in order to find the best path forward.
So kind of in speaking, with the leadership theme, as you've grown and evolved and encountered new challenges, are you a type of guy that doubles down on your strengths, or do you try to spend time rounding out your weaknesses?
It's a great question. I think I probably, spend, I think I probably recognize my weaknesses, and I try to, I've built a team that hopefully complements my weaknesses, and I'm continuing to add, in areas where we, where we are deficient as a team. In a lot of cases, that's, my weakness. It's a weakness, maybe potentially across our team. And so we're trying to bolster those areas to be stronger. But I do try to spend most of my time with my strengths because that's where I can add more value than me focusing my time on my weaknesses, where if I'm already weak at it, it's very hard for me to, to add much value. Just given the size of our organization today, there's usually someone that can complement my weakness with their strength. And, I'll rely on those individuals to help through, whatever challenge that may require that strength where I'm weak at. So.
Awesome. We definitely feel like as we're younger, some of our strengths and weaknesses change as we go through different experiences within life. And so, what would you say is something that you wish you knew when you first started your career?
Something that I knew when I first started. That's a great question. I mean, there's a lot of different things. I think when I first started, I think I would have, probably the biggest thing is a couple of different things. Probably actually, one is, I would have probably been more focused and realize that, happiness is short term. So you got to focus on what you enjoy doing, and when you focus on what you enjoy doing, you're going to find ultimately you're going to be happy, even on your bad days you're going to end up being happy because you're doing what you enjoy doing. So if it's, no matter what job you take, because I think a lot of times, people are forced to take jobs that they really don't want to do. And you should really focus on what you enjoy doing because you'll usually find a way to make a lot more money doing something you enjoy doing because you're going to be able to battle through the days that are, much tougher. I think, another part is, I wish I would have been a bigger just reader of books because I'm a big believer in knowledge, can be gained as well as even experience can be gained by reading a lot of books on different successful individuals. Reading, there's a lot of good writers that talk about different subject matters. Really like some of the stuff like Malcolm Gladwell has written, or even Simon Sinek. I mean, a lot of that stuff is great from a standpoint of building organizations and culture and understanding why certain things exist. But I think I would have at a younger age. I wish I would have been a bigger reader of books. Adam Grant's another really good writer that writes on a lot of different subjects that I think are great for someone young just starting out their career. And you can, like for instance, his book on originals is a great book that just talks about why certain people are more successful than others and why how different outcomes have occurred throughout businesses and so forth. But those are probably the two biggest advice I would give just as we're sitting here today.
Awesome. I definitely want to touch back onto that point that you mentioned earlier of being passionate about what you're doing, because I think that's one thing that a lot of students are trying to figure out now. And they're really just chasing the money and figuring out what pays the best and what will provide them with that lifestyle. But I think it's definitely important that we follow our passions and see exactly what we want to do. And so for you, what are some goals that you have for Peachtree 10, 20, maybe even 30 years down the line that you like to see implemented?
Sure. So I think, long term, we're trying to build an organization that will be sustainable for 20, 30, 40 years. But it's one of those that over the next 3 to 5 years, we do have goals set. And part of the goals in order to make us a sustainable organization is we want to continue to focus on what we do really well, which we have a proven track record in operating, developing hotels. We have a proven track record in lending to hotels as well as other commercial real estate assets. We've bought a lot of hotels successfully. We've sold a lot of hotels, and we want to continue to do that. But as an organization, because ultimately we are an investment management platform, and so currently we've got about 2.5 billion of equity under management, across about 6 billion of assets. And we want to continue to grow our assets under management very thoughtfully, very strategically, but we also want to diversify our assets under management. So over the next 3 to 5 years, I'm continuing to try to add, new companies on the corporate side. So when I say new companies on the corporate side, we are, as an organization, as an investment platform, we are vertically integrated. We have a, operation company, which is called Peachtree Hospitality Management, that operates 95 hotels. We have the development company that develops and renovates everything from the ground up, the lending platform, the asset management company, and so forth. And then we own a couple other companies that provide services to other industries. Like we own a company that does stuff in the media space where we finance the production of films. We own another business that buys land to entitle into subdivisions, for instance. And we're always creating, always looking to create other businesses or buy other businesses that can help create new investment opportunities to help diversify our assets under management. And so for us to be, to continue to have success on growing, I'm a big believer we need to continue to diversify, the makeup of the assets that we have under management. And we're going to continue to, over the next 3 to 5 years, we're continuing to focus on opportunities where we can, either start new companies that will help us drive those new investment opportunities, or acquire companies that are good at maybe operating or developing, or providing other services to like other commercial real estate asset classes, like for instance self-storage or multifamily, to add them into our platform as we continue to diversify our focus.
Awesome.
So does that look like going into, international markets as well? And kind of what's your thesis on that?
Sure. So for us, I've done stuff internationally in the past on the lending side, so I know enough to be dangerous. And I think for now, there's enough, over the next 3 to 5 years, there's enough opportunity just here in the U.S. It's much easier to operate, across the U.S. And we're gonna, continue just to focus, at least for the next 3 to 5 years, domestically. It's not to say down the road, 5, 7, or 10 years down the road, we may start to look internationally, but for now, in the near term, at least, we are focused just domestically.
Gotcha. And zooming in even more, just specifically on Atlanta, what's your outlook on Atlanta for the next few decades? I know it's kind of been outperforming other larger cities for the past couple years. Do you see this like continuing to happen, or what does Atlanta need to do to kind of take itself to the next level?
Yeah, I think Atlanta has everything it needs to go to the next level. I think Atlanta, you look at the state of Georgia, you know, Brian Kemp's done a great job, running the state, obviously. We've got, a very friendly state to do business in. We've got, as a city, Atlanta is, very well run as well. And it's got a very good transportation system. Just when you look at especially the airport for people to get into Atlanta, there's direct flights, pretty much from every city, nationally as well as internationally. There's, many flights that come in direct. So it's very easy to get, directly into Atlanta if you're flying. We have good, highway systems and so forth. So I think the infrastructure is here for Atlanta to grow. Atlanta's done a great job of continuing to diversify just, the industry that exists here. So I think it's one of those that, I'm a big believer that Atlanta will continue to grow, and especially just given, the proximity to so many major universities that provides an outlet, to potential, potential team members from different organizations that are looking to hire people. So you have really good, staffing potential. And if you're an organization looking to, you're looking at different potential cities to locate into, Atlanta's very attractive for the reasons I mentioned, just given, it's a friendly state from a tax perspective to do business in. It's got great transportation. It's got a great base of, younger professionals, especially people graduating college looking for their first job and so forth. So I do believe Atlanta's got really good tailwinds long term. I think the Southeast in general has really good tailwinds as well. There's a lot of other good, really good cities like Nashville and so forth that are very well positioned. Charlotte is another example that should continue to benefit just with the migration story, that's occurring across the U.S., where a lot of people are moving out of the Northeast. You've got a lot of people relocating from some of these, higher, just these states that charge higher taxes, that are less business friendly, as well as even on the West Coast. You have a lot of just migration into the southeastern states.
I think if the Falcons could win a Super Bowl, then the city will be complete.
That's true. If they could. So I feel like Georgia, Georgia's already won 2 national championships in a row. So maybe that's good enough for the whole entire local fan base here, because I think there's more loyal Georgia Bulldog fans sometimes than Falcon fans.
Yeah, yeah, no doubt. Kind of a silly one as we end here, but a lot of people have been asking and interested in office to multi conversion. I haven't read much about office to hotel. I don't know if people are trying to do that or if you've even looked at opportunities like that. Like I know the Candler Hotel downtown used to be an office building, so is there an angle there?
There's definitely been many, successful conversions of office buildings to hotels across the US. I know people are looking, as we speak right now, people are definitely looking at that as an opportunity. Office is under major, secular distress, I'd argue, right now because of the return to office. And there's a lot of office buildings that are, not fully occupied. So people are trying to figure out what to do with, part of the building or even all of, some of these buildings are fully empty. So I think, converting to hotel is a viable use or multifamily in some cases, but it really just comes down to the floor plates and the layout of these buildings. How easy is it really to convert use? And that really depends on, again, building itself, the physical plant itself, but also, just getting the right approvals and so forth, in order to make those conversions. But I do think that's going to be something that will happen. I don't know how scalable that's going to be, because that's a whole, another issue. But I will say that it does help, on the cost side in some cases if you have the right type of building, just given the fact that you already have a shell, and especially if you're in a downtown CBD type location, you can, in a lot of cases, you can, convert a building, an office building into a hotel at a much cheaper basis than what it would cost to go develop it new today, given where, construction costs are.
Yeah, very interesting to see kind of what will happen with the office over the next couple years, couple decades. But as we wrap up here, Greg, we like to ask this question to all of our guests. Most of our listeners are college students. So, what do you think is important for the younger generation college students to be doing right now? To ensure that they have the best odds of having a long, successful career in commercial real estate.
Yeah, I think the best thing they can do is, I'm a big believer in learning, and the best way to learn is try to learn. If you want to be successful in commercial real estate, I would highly recommend, beyond, going to class and so forth. I'd really focus on internships and try to get internships with organizations like us that are focused on commercial real estate and focused, not only on the equity side, but also the debt side. And I would highly recommend each summer, spending a couple of months at different organizations so you can see how these different organizations operate, but also, because as you work in these organizations as interns, no differently than with our internship program, where we'll end up with, I think, 9 or 10 interns this summer. You're going to be working on, potentially modeling, specific acquisition opportunities. You're going to be working on modeling and underwriting potential loans that we're making on the debt side, or even loans that we're looking to acquire, or hotels we're looking to develop from the ground up. So you're going to get real life experience, and I think that's invaluable to your growth. I also believe if you're looking at commercial real estate, I'm a big believer. If you really want to, learn a lot, definitely, get, I would highly recommend getting like an actual appraisal on properties, that are, like of a hotel property or if it's on an office building. Because if you read through those appraisals, a lot of times there's a lot of, good information where you'll get very educated on how these assets are not only being valued, but just understanding more, what, potential investors, lenders think about, how they think about these assets, as well as, I would highly recommend reading through like broker packages, because you always have these real estate brokers that are selling, commercial real estate assets. And if you can get, and read through those types of packages, and I would just keep that, intellectual curiosity. And that's the best thing you can do in order to be, to continue to learn and grow and be ready, for when you graduate college and you get your first opportunity to work on the professional side.
Thank you, Greg. And thanks again for taking the time to speak with us today. We really appreciate all the insights you're able to share with us.
Yeah, thank you, Peyton, and thank you, Greg. And it was good spending time with y'all. And if I can ever help on anything, feel free to reach out. And it was great talking with you today.
Awesome. Will do. Hope you have a
All right.
great rest of your day, Greg. And thank you again, Becky, if you're still in the room.
She's right behind me, or right in front of me, though. So she
Awesome.
heard you.
All
Yeah.
right.
Thank you. We'll see you.
See you guys.
Bye-bye.
Thank you, Greg.
So thank you to everybody who tuned into this episode, and we hope to see you in the next one.